Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we will discuss the TRIX Trend Cycle indicator. Okay, I'm just going to write out the name of the indicator clearly here. This is the indicator we are going to be discussing in this video. All right. Now, it's a custom indicator, meaning you have to download it from an external source and add it to your indicators library before you will be able to make use of it on your MetaTrader terminal. Okay. I'm going to add the indicator to the chart right away. The TRIX Trend Cycle indicator. Okay. All right, so this is how the indicator looks like. It is a dynamic oscillator that helps traders to identify overbought and oversold market conditions. All right, so it enables you to make informed trading decisions by leveraging the TRIX exponential moving average. Okay, so how do you identify good trading opportunities using this indicator? It is quite straightforward. All right, you just have to look out for two things. The first is the position of the indicator within this indicator window. All right, when the indicator has climbed up to the highest part, it indicates an overbought condition. All right, but you do not need to do anything yet until the color changes to red. After it changes to red, you can go ahead and enter a sell trade. Okay, on the other hand, when the indicator has dropped to the bottom, it indicates an oversold condition, but you do not need to do anything yet. You just have to watch out for when the color changes to green. All right, when it changes to green, it's a time to enter a buy trade. Now let us just look at a couple of examples. All right, and we're going to be starting from here. As you can see, when the indicator dropped to the bottom, you can see that the price of XAU USD, because this is the XAU USD chart, you can see that the price of XAU USD was already in a sell move, right? It was in a sell move. So this oversold condition indicated by the TRIX trend cycle indicator shows that a bullish breakout is about to happen. And then we finally had the indicator change color from red to green. That color change was a sign to enter a buy trade. So if we had entered a buy trade right about the time that the color changed, you can see that it changed somewhere around here, right? Right after this bullish breakout happened. And that is the reason why it is important to make use of trend lines, because trend lines help us confirm some of these breakouts, right? If you had made use of trend line here, you will notice that when this signal came was when a bullish breakout happened. So that was an extra confirmation, all right? So I would always recommend that you use trend lines. Also use horizontal support and resistance levels. These levels are going to give you a heads up as to potential reversal points ahead of time. There are different scenarios whereby your indicator might not give you signal early, but these levels will give you signals of a reversal on time. Okay, now that's by the way. As we can see, this indicator gave us a buy signal right about the time that the trend line confirmed the breakout. So that would have given you a higher confidence to enter the buy trade, right? And after entering the buy trade, you can consider setting your stop loss right below the breakout point, right? If you want a tight stop loss. And then your take profit level, just like I already mentioned, you can exit at the nearest resistance, because this resistance has already given you a potential reversal point. Now, it doesn't mean that there will always be a reversal. Of course, breakouts do happen. But if you already have a good risk to reward ratio, all right, and you are trading a reversal signal. Because one thing with reversal signals is that it could be a consolidation that is forming. For example, when a breakout happens, sometimes there is usually a consolidation before the price finally prevails in the direction of the breakout. Okay, it doesn't mean that it happens like that 100% of the time, but in case if it's just a consolidation that is about to begin, it is actually a safe bet to exit at resistant levels instead of trying to ride the trend, because you are not yet sure if the trend has started, right? This is just a sell trend that ended, so you are not yet sure if a bullish trend has started. So it is ideal that you confirm that the bullish trend has actually started before you leave your buy positions to run for long. Okay, so you can decide to exit at resistance once you have a good risk to reward ratio. So for example, if we had entered a buy around here and set our stop loss right below the breakout point, that's about, let's call it 15 pips, right? About 15 pips. And then our take profit should be a minimum of 30 pips, right? And we can see we have that. So given the fact that we have a good risk to reward ratio, this would have been a good place to exit our buy trade. As easy as that. And then we can see that we got a sell signal around here, right? Around here was when we got a sell signal. So even if you are waiting for a sell signal to use as your exit signal for a buy trade, then you will notice that it is still around the same point that you would exit at the end of the day, because this resistance is where we would have exited if we are using resistance for our take profit level. But at the same time, the sell signal came around that resistance. So even if you wanted to use the sell signal as your buy exit strategy, that's actually fine as well, okay? And you would have still exited around the same point. And let us just quickly look at the sell example before we round up. All right, let us see. Okay, now you can actually use this indicator whether in a trending market or a consolidation market, but just, you know, exercise caution, right? Especially if you are using it in a tightly consolidating market. For example, something like this, you know, when the consolidation is within a narrow range, when it is within a narrow range, there could be high chances, or, you know, higher chances of false signals, right? Or late signals. For example, let us just quickly look at this. We can see that we got a buy signal when the price was already midway through the consolidation. So do you want to enter a buy here, set stop loss here, set take profit here? You don't have a good risk to reward ratio in that scenario. So when you have a tight consolidation like this, I will advise you stay out of the market unless if the consolidation is wide, within a wide range, okay? But let's just quickly look at the sell example, okay, real quick. Now we can see that, okay, we had a sell example around here. The price was bouncing off this trend line, which was serving as a dynamic resistance. And we can see that the indicator entered overbought territory and then flashed a red color, right? The color changed from green to red. So it was a time to enter a sell, set stop loss right above the previous swing high. And as I said before, your take profit level can be at your support level, okay? That is support or resistance, support for a sell, resistance for a buy. Or you can just wait for the indicator to change the color from red to green within the oversold territory and you exit your sell trade. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.